Hi, I'm Kristen King, and you're watching Pink Diamond, the show where we help you find the diamonds in the rough of the pink sheet and small cap market. This week, we're going to look at a sector that you wouldn't normally associate with the OTC and pink sheet markets, banking, though in truth, there are around 50 bank holding companies traded on the OTC markets. The stock we're looking at today is California First National Bancorp, which has a market cap of $172 million and annual sales of just under $17 million per annum. The business is based in Irvine, California, but California First National is an internet bank with no physical branches. The bank offers its customers money market checking accounts, savings accounts, and the ability to buy and hold certificates of deposit. The interest rates available to savers and checking account holders are tiered based on the size of their deposits. Customers can pay bills online and access their cash through the use of an ATM card. CalFirst, as the online banking division is known, even reimburse some ATM fees to their customers if they are charged by another provider. The bank is insured through the FDIC scheme for a minimum of $250,000 per customer. In its latest report, for the 6 months ended December 31st, 2020, the business generated net income of $16.3 million, which translated to earnings per share of $1.61. The stock currently trades around $16.70, so it's on a simple PE ratio of just over 10 times earnings per share. However, much of the income was generated through gains in the bank's proprietary investment portfolios rather than banking itself. In reality, low interest rates have eaten into the bank's margins. Net interest income, the difference between the interest that the bank receives and the interest it pays to savers and depositors, fell by 46% over the last 6 months of 2020. That was equivalent to a negative $2.7 million drop in income. Recent comments from the Federal Reserve suggest that low interest rates are going to be with us for the foreseeable future. That low interest rate environment is likely one of the reasons that California First National has decided to sell its online banking business to concentrate on its other principal activity, that of leasing. The leasing business operates in 3 main areas: commercial finance, university leasing, and government and educational leasing. It also has a presence in the not-for-profit sector. Leasing allows organizations to update their equipment and plant to the latest technology and to spread the cost of the products via financing from California First National, whose loans are secured against the equipment that the organization has purchased under the lease agreement. As of the end of December 2020, California First National had a lease loan book of $51.2 million with no non-performing assets. The banking division is being sold to rival DMG Bank Shares Inc., who will pay a purchase price equal to the equity capital remaining in the banking business, plus a further $2.5 million. They're effectively paying a small premium to the bank's net worth. Once the deal is complete, which should be within the first half of 2021, the business will be repositioned as California First Leasing Corporation and will focus purely on leasing and equity portfolio management businesses, which have much higher profit margins than commercial banking activities. The prospects for the leasing business has been attracting the attention of Wall Street professionals, and Trackstar IQ, our proprietary search tracking database software, has identified 135 searches and requests for information on the company from 102 institutional investors. That puts California First National in the top 15 most searched for tickers in our OTC database, and at number 6 in terms of the number of Wall Street pros researching the stock. The recent performance of California First National Bancorp stock suggests that they are right to be interested. The stock has risen by 10.55% since the start of 2021 and by more than 3% over the last week. One note of caution, however, is that the stock can be thinly traded, which means that getting in and getting out of a position may not be that easy. In these situations, it's probably best to wait until there is sufficient volume in the name to allow two-way trade, and that will typically come when there is news flow or new information on the stock. A watching brief for now then, but it's certainly a stock to keep an eye on as it transitions to a new life as a leasing business. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar. Small and microcap stocks can be high-risk investments, so before you make any decisions, please ensure you do your own due diligence.